Good morning. Good morning. Welcome to Market Wake Up. My name's Jordan. This is John. You're on the one-stop shop to get you up to date with everything you need to know ahead of your trading day. But things are changing just a wee bit, John, aren't they? But no, today we're going to talk a little bit about US retail sales. I'm looking forward to John's big buy, and I've got a couple of little, let's say, promotions that I'm excited to share with some of you guys. So without further ado, let's get into Market Wake Up. John, happy Friday, mate. We made it to the end of the week once again. It's been a week. Market's relatively predictable, right? Relatively. I've not made money on it, which is a strange thing to coincide with relatively predictable. Well, short-term trading, like investing I have, but short-term trading I've not made money on them. How have you found this week? First week post-election. What's been happening in your world?
Again, like you've just said, very predictable, which is nice. I've basically just continued to buy US dollars against most currencies, mainly the Australian dollar. Sorry, Jord. I still quite liked that play going through this week, especially because at the end of last week, China failed to provide that stimulus, so there was just that little bit more of an edge there. My only concern with the move was that we were coming into some really big levels from a technical perspective, but also we had some data out of the RBA, almost kind of cementing that the RBA aren't really going to cut rates. But employment figures came out, which helped. Employment figures came in a lot lower than forecasted. Revisions on the last numbers as well. Lower. So that kind of helped fuel my Aussie US dollar shorts this week as well. So yeah, I've just mainly been focusing there. Tried to jump in on a couple of the metals, but haven't really found an entry for those, unfortunately.
I feel that way. I'm flirting with metals. I'm flirting with commodities as a whole at the moment, but I can't pull the trigger. I'm just flirting.
I saw one guy talking about that he's been selling gold for a long time, like blah blah blah, and I was thinking, he would have been crushed. This guy. Yeah, well, he would have been crushed for a while before it did turn. I think I was talking about this the other day as well. I was talking about the sort of where was the best sort of metal plays and stuff. And for me, it was a lot clearer when you look at sort of silver, when you were looking at platinum, because there was a lot more behind the move. Gold, I really struggled to think of a reason, not necessarily a reason to get short, because silver and platinum are heavily correlated with gold prices. I think the silver price at the moment is around about an 89% correlation with gold prices. So for me, when I was looking at the silver short, I was like, yeah, that looks great. I could go to gold and try and trade that as well, because gold would arguably be more crowded essentially at this point, because it's gone so far. More people would have been involved with it. The move could have been a lot bigger than what it actually was. But I just couldn't find that little trigger point for me to really get involved there, because like I said, silver had the backing from the COP reports, platinum had the backing of the COP reports, so I was a lot more comfortable looking for shorts over on those markets, and that means a lot when it comes to putting money on the line, right? Being comfortable in a position allows you to think more objectively when you're in the position, rather than emotionally. So for me, that was a big factor.
How long do you reckon I can push it before the boss cracks the shits at me for not having a position?
It depends why you've not got a position. Right. You can't just be sitting there. But if you've got other stuff going on, then I think it's all right. But no, I think you've got to be selective, right? I've been involved with trading in the past where I've like tried to hit every possible setup that I've got going on, and it's never actually ended up with too much of a positive outcome. So for me, I would prefer to be selective, and then try and get as much exposure as I can, if I feel good about it. I think that's the difference. When you feel good about something, you feel more confident not necessarily mean it's going to work out, but there's an opportunity there that if it does start going your way, there's a good possibility that you can make some good bank on it. But that being said, these dollar plays, I think, have been really good since the election concluded. These dollar moves. I am starting to get a bit twitchy on the dollar now, though. I am starting to think, I don't know whether I want to be involved just yet. In terms of buying it again, I think I need to see a bit of a pullback now. I think this market's gone a little bit further than I anticipated originally. So I need to kind of sit on the sidelines. I'm not saying I'm bearish dollar, but I'm not going to go into longs right now either. So
yeah.
But and I think again that kind of comes back to being selective, right? Are there better markets that I can go and trade? Essentially, yeah. I mean, arguably, could we go over to the crypto markets and have a little look potentially?
I've seen your LinkedIn post recently, John. I know you've been looking at the crypto. I even seen you had a little bit of a comment on David's iBit play as well, looking at Bitcoin. Yeah. Are you starting to flirt?
I am starting to flirt. I enjoyed the content over there. So I was listening to David and I was like, this makes a lot of sense, you know. Do I like it where the prices are right now? No, because the trader room is like, that's the where's my risk reward play, right? Where can I place my risk there where I feel comfortable? And I can't see that just yet. So I'm not long or I'm not bearish either. But I'm going to wait to see what happens if we do see lower prices. I am worried a little bit about the crypto market. I'm worried about the attention it's garnered over the past 2 weeks because it's very sentiment driven. Wow. Yeah, because it's only really started to come back in the headlines. Well, yeah, true, but it started to definitely. We had a whole year of sideways consolidation, and no one was really talking about it. We've now had this break into all-time highs, and suddenly it's everywhere again. It's classic what goes on when markets make new all-time highs. But do I want to be out of the loop of it? I don't think I want to be out of the loop of it, but do I want to be aggressively getting involved with it? I don't think so. We saw, a very similar. What I got to wait for? What I got to wait for is my mate texting me going, "What do you think about Bitcoin?" Then that's what I got to wait for.
That's the short indicator.
That's the short indicator. Right,
I'm out.
Yeah, and I'm really surprised no one's mentioned it to me yet. So I still feel like the market could be quite bullish.
I love
not that text yet.
Yeah, I love these. No, I've not had a text of anyone from.
Oh, actually, you maybe have. You have.
I think I have. I think I have actually had a message of someone asking me if I had seen Dogecoin.
Oh yeah. Because that's obviously gone for the roof. Did you see that?
Yeah,
Elon Musk is now the head of the Department of what is it now?
Yeah, regulation or something like.
No, it's Department of Government Efficiency, isn't it, or something?
Yeah.
Spells out Dodge. And I swear he must. I reckon he knows. I reckon he's come up with that, and he's gone. I bet he's gone to Trump and gone. We need a Department of Government Efficiency. I can head that department up. And Trump's gone. That sounds incredible. I'm going to take you on with that.
It's impressive. This is the world governments we're talking about here, and if that just Doge has gotten in there, that's massive. Right, Friday here at Market Wake Up is becoming a new day. Now, the reason I'm saying that is because Friday, John, we're going to get into Great British Pound GDP, which came out not too long ago, and we're going to have a little bit more of a ramble of what's happened today, US retail sales, and then into your big bite. Friday marks a memorable day for us here at Market Wake Up because it's the day that our newsletter will be going out. So John and I have joined forces in typical Market Wake Up fashion and decided we're going to do some written content. We are going to do a weekly newsletter giving our take on what's happening in the markets, a little bit of kind of introduction to some of the key terms that we talk about, but still keeping that humor there. The boss is involved. You'll see the content in there. That's going to come out in exactly 25 minutes time. That is going to be sent. So if you haven't subscribed to our newsletter, follow the link I just chucked in the chat there. Head over and make sure you're subscribed because that'll be coming out 5 minutes after today's stream. And then we're cutting down our market wake-up streams to just the Monday. It's going to be bigger. It's going to be longer. It's going to be more fruitful, I'm going to say, because we're going to pack a week worth of ideas into one stream. So it's going to just be John and I arguing on the positions that we have. And instead of live streams on a Wednesday or Tuesday and a Thursday, they are going to be videos. We've already got some of those videos, which are going to help introduce you guys to macro trading and the thoughts of that. So we're going to be making a few changes, and I want to get you guys up to speed straight at the gates. The best way you can get up to speed, the best way you can get in contact with us, because with these emails, you can actually reply to them. And you can even leave comments in these emails. So if you want to chat to us directly, this is the spot. All free. Standard, like we do here at TradeDelicious. It's all free. If you want some more written content, you want to get John and I's thoughts straight in your inbox, there's the link. Right. Great British Pound GDP. Missed expectations today, John. Did you have a forecast for this? Did you have an expectation for it? Do you care?
All great questions. Did I have any expectations for it? Not really. I think when everything was announced with like the likes of the budget anyway, a lot of talk was there's going to be a lack of growth in the UK for a while. So I don't really see this as too surprising, in my opinion. I don't know how the market's reacted to it. I'm not looking at pound US dollar at the moment, so I might just quickly flirt over to it. It has had a negative reaction. And I mean, to be fair, when you look at the pound versus the dollar at the moment, it has tumbled. It has tumbled a fair bit. We were holding those 1.3s for a little bit. And since then, it has just completely rolled over. We're trading down towards the 126s now, which is very interesting to see. Again, that dollar strength really pushing pound lower. But yeah, I think the sentiment for the UK at the moment is there's going to be a lack of growth. That's what I'm seeing across the board in terms of just the way the budget was announced, the way that analysts are kind of digesting that information. When you look at sort of, I take these with a pinch of salt, but when you look at where banks are kind of positioning themselves on the pound in terms of their forecasts, not talking about COT reports, but their forecasts are more sort of in line with pound bears as well. So yeah, I'm not liking the situation on the pound at the moment. I think we've seen euro pound have a little rebound higher as well, although that did break into new lows as well. But yeah, pound's not having a great time at the moment. I think the lack of growth could be hurting the sterling going forward, and it's going to be interesting to see how the Bank of England play this, because if there is a lack of growth coming through, then it could obviously lead to a bit of deflation going on, and they might have to start cutting those interest rates. So yeah, I think the pound could be in a little bit of trouble if we do start to see that sort of talk coming about.
Yeah, I agree. I've got nothing really to add there. Have you cheated? Have you seen the VIX today?
I've not seen the VIX. I'm going to focus squarely on your eyes right now.
Look at me. Come on, look at me. Where are we at?
14.8.
Ooh, he's gone for the 14s.
Actually, I shouldn't have said that because the stock market dropped yesterday. Why did I say that? I should have said 15.3.
Yesterday at 14.1.
Oh, did we close lower yesterday? That's interesting.
Yeah, we closed higher on the day at 14.1. Yeah. We're at 14.9.
Okay, so I said 14.8. So yeah, because I know the stock market dropped yesterday, and typically you would see the inverse happen on the VIX. So
yeah. Well, let's continue that. The stock market did drop, and I don't think it's going anywhere. Because looking at the indices on the right here, they've not looked overly pretty going into today. I'm going to quickly run you through up to date everything you need to know with the charts here. Aussie dollar is up 0.2%. The euro is up 0.4%, finding a bit of strength, the euro there early morning today. The pound's unchanged, US dollar CAD unchanged, US dollar Japanese yen down 0.5%. The Oz 200 or the XJO is unchanged. The DAX is down 0.15. The Nikkei is down 1.2%. The FTSE is relatively unchanged, and the S&P 500 in pre-market looking at 0.6% down, which is interesting. Seeing a bit of risk off, maybe some profit taking from the Trump trade happening, moving into the Friday retail sales day as well. Coffee's up 2.4%. Awesome. Gold's up 0.2%. Nat gas down 1%. My take it to go today is Nat gas. I've got a play to show you at the end of the stream today. Silver unchanged. Sugar down 0.3. Oil down 0.9. Bitcoin up 0.8. Ethereum unchanged. Bonds relatively unchanged across the board for the ones that I care about there, John.
Yeah, for the ones you care about, I like that. Yeah, the S&P was down yesterday, wasn't it? Quite interesting. We've seen some supportive data in terms of inflation, right, in the US at the minute, which is arguably bearish for stocks, right? Because if we are going to see this change in tone from Federal Reserve, Chairman Powell actually spoke yesterday. I don't know if you saw any of the comments from that. Completely passed over my mind that he actually spoke yesterday, but he basically was starting to talk about the idea that the pace of cuts aren't going to be as aggressive as what's expected. Now that is very interesting because that tells me that, and there's a possibility of them not moving rates, which would be, I would say, would be more negative, the stock market right now. So you can see that you're looking at the bond yields there, they're starting to move a little bit higher. You can also see even sort of at the long end of the curve, they're looking a bit bullish as well. So they may not need to bring those rates down as aggressively. And this is going to be very interesting for those that are very bullish stocks because of the Trump trade. Again, is this a market that's kind of getting overcrowded because of the Trump situation? I haven't seen anybody really say Trump coming in down stocks. No one's really saying anything like that, because in the past, when he's been involved and what he wants to do and bring sort of tariffs onto foreign foreign investments or foreign countries in terms of the trade deals that they do. Essentially, he wants to encourage growth within the US. So, the stock market play there was kind of easy to predict as well when he got into power.
Yeah.
But is that becoming, again, an overcrowded market? Is that going to be like everyone's going to go, oh, yeah, bullish stocks, bang, bang, bang? It's, sometimes that can be a negative thing.
My bold call with Trump getting in, I can't remember if I said it on stream, if I said it to you behind the camera, or if I was talking to completely different people, was Trump in, CPI higher. That was my bold call. Was that to you?
Yeah. No, I think you have said that on a stream.
I've said that on stream. That's my opinion. I think if he launches the policies he launches, we definitely can see an inflation reignite. And I think Powell knows that. And I think that's probably why he's just preparing everyone, going, hey, we're not going to cut into this because there's a slight chance he does some policy changes. And guess whose head falls on the stick? Mine. So if they cut rates and inflation goes through the roof at the same time that Trump does policy change, there's going to be a little bit looking in there. Looking at the US 2-year yields here, which is below, and obviously the US interest rate coming back down, they're not too far away from each other right now, which means the bond market, they're within 0.1. Is that right? No, that's not right. They're within 35 basis points. Yeah. They're within 35 basis points of each other. That's reasonable. But if the trend continues, it does mean the bond market is expecting rates to remain. And if Powell is also expecting rates to remain, I think it's fair to say as traders, we should start expecting rates to remain.
Yeah. I'll be interested to see, because obviously Chairman Powell and Trump, I don't think the relationship's very good there. I'm going to be interested to see how Powell handles the situation in terms of, will he just try and do the opposite of what Trump wants?
Just like a child, just spite him.
Just be like,
you change monetary policy, I'll change fiscal. Let's just hedge our bets.
Yeah.
One last thing for you before we get into your big bite. US retail sales coming up today. Forecasted core retail to find 3% growth. Do you think they get it?
Yes.
We have to take into account the tornadoes and storms, though, as well.
Right? Oh, true. And there's been a lot of
which could boost retail sales.
Yeah. Yeah, that's a tricky one, that is, because there has been a lot of strikes as well, hasn't there? Boeing strikes and stuff. Do you know what? I'd like to say higher. I would like to say higher, but I'm not feeling it.
You got a number?
I'm going to say 0.2. I'm going to play it safe.
0.2.
I mean, previous.
I like forecasts. I think 0.3.
0.3, yeah. 0.3, 0.2, I think is, safe bet. What will be really interesting is how does the market react to that information? Because this is obviously to do with consumer spending, and we are coming into the months where consumer spending has known to rise, because from a seasonal play, we're coming into the Christmas period. Can you believe it? We're coming into end of November, December. Christmas is just right around the corner now. This year has flown by, and typically around these types of months, we usually see a little bit of an uptick in sort of spending and whatnot. So I'll be interested to see if that is the case, but I'm also very interested to see the market reaction. I think if we get some strong consumer spending, that's positive for stocks. But what if we get a bearish reaction? That will tell us a lot, I think, about where the market is positioning going ahead. I think if we get positive numbers, bearish stocks, I'm leaning a little bit more towards bearish stocks.
I agree. Sorry, I've completely got Barry. Please tell me you made some money on this. Please, because this is one of those yearly. This is one of those yearly trades, those yearly seasonal patterns which I trade, and I haven't traded it this year. It's sugar all over again. That slow, bang, seasonal play. Hey, we go up here. Look at the chart I'm showing. Seasonal play is not lied. They did go up here, and it absolutely nailed it. Barry, oh no, you're just as bad as I am. We knew this was coming. We knew it was coming. Neither of us made money on it. Ridiculous.
What date was the seasonal play, Jord? What date was it?
It's in and around around the 9th of November. To like still going like till the 19th, but I mean, look at the chart. The move's done. I wouldn't be trying to capitalize on the last 4 days here.
Is lumber at all-time high there?
I'm looking at a CFD of lumber right now. Okay, so let me.
I was going to say that's surely got to go back further.
No.
Yeah, I was going to say no.
Even that is isn't it? Sending me futures charts aren't sending me too bad. Let's see if I can get some nicer ones.
No. Be interesting to see, how this all impacts markets. Lumber futures going up.
Yeah, I mean, cost of building a home is going to get more expensive. So that's anyway. Let's get into the big bite, shall we? Let's get into the big bite. It is a great seasonal play. I didn't make money on it. It looks like no one did. This is why you check seasonal patterns, and this is why you get loud in chat to tell me when I'm falling asleep at the wheel. Big bite, John. What have you got for us?
I've actually got an old friend. I got an old friend today. We're actually revisiting one of our old and bits of analysis that we did, because I still feel like there's a good opportunity on this market, essentially.
Interesting.
So, do you remember when we were talking about euro versus the Norwegian kroner?
Yeah, I do.
Yeah, well, it's back. I'm come back.
It's back, baby.
Back, baby. He's back. And I just wanted to highlight this because the situation with the euro has arguably, it's not great, right? In Germany, we have seen them call the snap election now. Well, it was going to be a snap election. A lot of the downside in euro was coming from the idea that in Germany there was going to be this big snap election within the end of the year. They've now set a date for that. It's the 25th of February next year. So there's a little bit of a calmness coming from that, essentially. But growth in the Eurozone not looking pretty at the moment. And the likelihood that the ECB are probably going to continue to cut rates is fairly high. So I'm still looking for this short euro play, but against economies that are doing fairly okay or doing all right. And one of those is still the Norwegian krona. I'm just going to bring in some of the analysis that I was doing on this. Now, a lot of a question we had in a recent stream, but we didn't quite get around to it, was do you trade the sort of interest rate differentials and things like that? The comment was interesting because I do, but I have to have, it's not just about the interest rate differentials, because if you just trade those, you're going to get stuffed, right? There is a lot
that they're on.
Yeah. There's a lot more into it than just the interest rate differentials. But essentially, when we take a look at the euro area interest rate versus the Norway interest rate, there's a complete, it's completely different, right? We've got Norway that are holding at 4.5%. Look at the ECB right now, cutting to 3.4%. The path to get into 3.4% has been rather aggressive. So the one play that we were talking about, a while ago, if I just bring back the chart, I think it was around here, back in October, was I like the euro knock short, and we pointed out a couple of different levels to do that. One of the levels was here, and we did get, let me change the color of that because you can't see that, and we did get a short-term move to the downside, but then we had this move higher. This is largely due to the pricing of oil, right? Because Norway are a huge exporter of oil. Oil prices have fallen aggressively, but they've now started to stable a little bit. And I think this is when the Norwegian krona has come back into its own a little bit, where we've seen that sort of downside play. This was one of the levels we were talking about as well, up towards that 11.95, that little bit of a supply zone up here. There was a lovely little bit of a consolidation and a breakout. So this is something that I actually got involved with up here. Market moved down and now we're consolidating. So I'm looking for an extension of this move down into the 11.6s, with the potential for this to break even lower down towards the 11.45s. But I just wanted to bring us back to it because it's a market that, just because we're not necessarily talking about it all the time, doesn't mean that market should be ignored, right? When we do our analysis here, it always goes on a watch list for me. And I always check that watch list. Then I'll go through it, even if it's daily, right? End of day, I'll go take a look at that market. Where is it positioned? What's going on? Is there a potential opportunity? Has anything changed? If we look at the GDP growth, we haven't got the Q3 figures for Norway yet, but the pathway for that was higher. We know in the Eurozone, it's not great. It's not going to get much better at the moment. It's at 0.4%.
It's in the bin.
It's in the bin, sorry. Yeah, I need to get that on a t-shirt. And the inflation rate is around similar areas. So just to kind of narrow it down quickly, because I know we're running out of time a little bit. Interest rates in Norway are a lot higher than euro, so you can get some kind of benefit there when you are short in this currency. Currency pair. GDP, Norway's is a little bit better. If we start to see the oil prices move higher, then I think Norway, or the Norwegian kroner at least, could get a little bit stronger, and euro could suffer because of that.
I like it. It's one of those unique ones that slaps you in the face. Like, the knock is not something a lot of people look at.
No.
So it is one of those ones where I like hearing about it because it's not something I usually look at. And sometimes going to one of these exotics, that's the one. I was going to call it an executive. Sometimes going to one of these exotics is so refreshing, just to get away from the usual stuff that we drown ourselves in. I like it. I like the idea.
Yeah, and I mean, like, because let's we could talk about dollar CAD, but dollar CAD is very much approaching George's target. But you can get exposure to a commodity based currency elsewhere that isn't suffering, and Norwegian kroner is one of those. If you look at the fundamentals of Norwegian kroner in Canada, they've got similar underlying sort of assets that help them, commodity based, right? That they rely on heavily. But the policies from the central banks are completely different. Canada's really struggling. They're cutting rates aggressively, unemployment rates high, whereas Norway is not in that position. So you can go and look at something very similar and go, well, okay, I want to be exposed to maybe the play of oil being bullish But where do I go and play that? I can't go play it in Canada because they're suffering at the minute. Can I go over to the Norwegian krona?
I like it. Take it to go today. Spicy one, right? We're gonna jump into it. We're gonna jump. Oh, I'm not screen sharing. We're not gonna jump into it. Give me 2 seconds. We are about to jump into it. Seasonal chart brought to you by Season Axe. Bang! Look at that. 33 years of data. 75.76% win rate. There's my quick maths. All right, a 75% win rate over 33 years, massive here. Average return of 5.09% on net shorting nat gas. When you actually have a look at the average return of those 25 whopping losses over 33 years, 32% the maximum profit that this has brought in. 10.54% the average when looking at those 25 losses. 10.51% on natural gas. It's an interesting one to keep your eye on. We are moving into it. 25th of November is technically when it begins, all the way down into early December, 6th of December. Keep an eye on it. The reason, always ask why. Always ask why. Always ask why. The reason I think the why is here in nat gas is the buying for winter has happened. The demand is there. This is where we usually top out. This is where we find out if we have bought enough for winter stores or whether we need to buy more. 75% of the time you've bought enough. You don't need to buy any more. So you do see the demand drop off a cliff just as you enter those colder months because governments believe they've got enough natural gas to get them through the winter. That's the seasonal play. That's the why, in my opinion. That is your take it to go today, guys. We'll be back on Monday. Our email is about to go out in 3 minutes. So if you haven't, make sure you're in the chat. Go subscribe to the mailing list. You will receive an email from us in 3 minutes. John, have a fantastic weekend. Everyone else, I hope you're having a beautiful week. Barry, I'm not sure if I can legally tell you, but yes. I'll just jump in. I'm going to trade it. Without further ado, have a good weekend, guys. We'll see you very soon. Take care. Thanks.